All right, welcome back for the episode of Carnivore Trades. Today is a special video here, and today we're going to be talking about gapping up versus gapping down, how to spot a market bottom. And so recently, one of the things I've been talking about a lot lately over the last couple of weeks is, we've had a few, and we were obviously in a downtrend here, and I've tweeted about this. I've told my members specifically. I've said that said on this channel here, repeatedly, markets don't bottom on a gap up. Gap ups are for selling. And what I mean by that is the psychology behind a market bottom here is generally you're going to have max fear, right? And if you're going to gap higher, does that mean that investors are fearful, or does that mean that they're optimistic, right? So that's sort of the thought process there. And you can see here, this was one of the notable days recently that I talked about this. We had this beautiful dump here post FOMC. We came down pretty sharply. We had this minor reversal. We faded that whole move. And then, obviously we closed lower. And then the next day we gapped higher, and I said, don't trust this gap higher. I said, guys, this is not a bottom. Even though we rallied on the spiders here, 422 to 426 by the close of, that's, a 40, 50 point move on the SPX. That's a big move by the end of the day. And we actually closed green. A lot of people are saying, that's it, it's over. Haha, bears are screwed. Bears the shorts got screwed over, and we're going to, zoom up to highs. I said, no, that's not the psychology of it. A lot of people say, the gap fill as well. We filled the gap, but you gotta have panic here. And you can see here, we continued higher the next day. We gapped up, and it ended up being a gap and crap. The following day after that, we came back down, and then we gapped down here, and that ended up being your low, really. So again, the gap down got very close to the 200 MA, didn't quite pierce it, and then we had this big move up. So again, you want to, in order to put in, and this is just a short-term basis too. So even on a short-term basis, you want to get that gap down to put in the low. Same thing even back here in late July. We came down here, and there was gap ups. There was a gap up right here. There was a gap up right here, but the low was not put in until we had that big gap down, and then you V-shape. The gap down is what sucks in all those shorts. It gets that max panic, and that's what gives you the V-shaped move. And you can see here, we gapped down there, and then it ended up just being a short-term low. So you can assume that, and I'm doing this video on Friday, October 20th, you could assume that I'm of the opinion that if Monday we're gapping up, I don't think the low is in. I think you need to get a gap down to put that low in. Some other previous really good examples here, continuing to go on, and we roll back the tape here to February, March. Nice down move, little pop here, and even right here, we gapped up, and then the next day we got slammed, and we gapped up on that day too and got slammed. Gap down, big gap down, right? Look at the size of the gap down here. So that's going to give you that V shape, also in a nice support level there. Another good example, there's countless ones last year. If we go into, the September, October move, down move, down move, down move, gap up, right? Gap ups are for what? Selling. So big down move here. And then we came back up, big gap down, downtrend, 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 gap up, another low, gap up, lower high. Then you get the big gap down, max fear, right? That's how you get those lows to be put in. You can go back to COVID too. Again, big gap down there. And then the next day, yes, we gapped up, but you had the gap down beforehand, kind of like an abandoned baby sort of island setup, and you get the big gap and go after that. So that's sort of the psychology behind it. There are very rare exceptions, and one that I'll show you is 2018. And you can see here, 1, 2, 3, 4, 5, 6, 7, 8 days in a row down. We did gap up on the actual day that we made the low, technically. It's a rare exception. It does happen. Why did this happen? Well, we were down 20% off the highs, and again, we were down eight days in a row. And, going into, if we can zoom out here, going into a big support level, down 8 days in a row, sometimes you gotta, it's not the be all end all. You have to look at everything. But you got a big gap and go. And the next day, too, technically, you did gap up like 4 points, which almost negated about 50% of that candle. So if you can gap up enough, if we go back even further here, if you can gap up enough, like this instance, we had this pretty good downtrend. You know, you negated the last 4 days of selling, or last 3 days of selling with the open. That's a situation where shorts are just trapped down there. That's a situation where you wouldn't need to see a gap down. But when you gap up, if it was right here, let's say, if we were to gap up to 422 on Monday, that'd probably be a selling opportunity. At some point, maybe we could even rally back up to the 20 MA, but I would assume, based on probabilities, that the lows are likely not in. Just generally, you need to get max fear, right? You need to get that big down move, that down open, and that's how you can suck in those shorts, suck in the puts. And that's what gives you the fuel for that V shape. So again, it doesn't mean that you can't put in a low, right, off of a gap higher and even test it, and then intraday you close back green. But that balance lasted for 2 days and you came right back down. So that's something that I've been talking about a lot lately, and it's something that is very important in bear markets to understand, because those gap ups, I mean, I can tell you, I've made a killing off of those, trading those gap ups. If we're in a downtrend, in a bear phase, and I see a sell off, and the next day we're gapping higher, like just 2-3 points, I'm looking for lower highs, and it's a really easy fade. It's a really good trade to make. In fact, even yesterday, Thursday, it's a trade I took as a day trade, right? What did we do Thursday morning? We gapped, I'm looking at a 10-minute time frame here. We gapped higher after a big sell off on Wednesday. Below the moving averages, that's a fade, right? So that was an easy trade off the open, that I was able to take. And again, so say Monday, if we gap down big and then you see a V shape, that probably means the low is in. So that's something to look for there. But I hope that helped clear everything up. I know I've gotten a few questions about that lately. I've been definitely talking about that a lot. And again, it's not the be all end all, right? It doesn't mean that there can't be one exception where this doesn't happen, especially if you gap up. Like for instance, Monday, if we gapped up to like 425, okay, and then you probably trapped a lot of shorts. But it's very rare to see something like that happen. Markets top on euphoria and they bottom on panic. If we gap up 3 points, there's no panic, right? It needs to be an impulsive move. If it's going to negate a powerful move like that on volume, 123 million shares on a Friday, preceded by 121 million shares on the previous Thursday. So generally going to see that big flush down. That's how markets bottom. And generally, rule of thumb, gap ups for selling. So hopefully you guys can make some money off this pattern. If you're interested and want to find more, come find me on carnivoretrades.com. You guys take care, subscribe to the channel. See you guys all later.